And good morning, traders. Welcome back to NeelyFX. My name is Michael Neely, and this is the channel where I talk about helping you make money with foreign exchange trading, prop firm trading, also getting into expert advisors for the MetaTrader 4, MetaTrader 5 platforms, and all those things that I do too because I think they're fun and also sometimes lucrative, sometimes they're not lucrative. With that, welcome back. It's the weekly Forex look ahead for this week. It's Sunday, April 26th. We're going to get into the weekly charts and kind of take a look at where the some of the opportunities to trade Forex might be. Market's been a little bit unusually quiet lately. I think everyone is sitting, well, not we all, but I think everyone else is sitting around, the market makers are sitting back trying to figure out what's going to go on with the Iran-Iraq thing, and also, who knows, a whole bunch of other reasons for things to not go, as planned. But at any rate, there's not really a whole lot of trading going on, but at the same time, you can make money on this trading the smaller time frames, trading around the I don't know, the 15 minute, 5 minute, 30 minute. I personally do not trade those. I pick my opportunities in the weekly and the daily charts, and then refine down to the 4 hourly and the 1 hour to place trades. So I don't place many trades at all. At the same time, I don't put much money at risk, but that's my strategy. That's the way I do things, and that's the way I've been trained to trade. But at any rate, let's go ahead and get into the telling you what the risks are, because there are risks with trading forex, and you need to know about them. They go something like this. Let's see. This channel is for educational and entertainment purposes only and does not constitute trading or financial advice. I'm a professional trader, not a broker, trading my own capital. I do not solicit funds, manage client accounts, nor do I hold CFTC or NFA registration at this time. I have held NFA registration in the past. Forex trading is highly speculative with a high risk of losing some or all of your investment capital. Only trade with funds you can comfortably afford to lose. And here's the CFTC risk disclosure. Forex trading carries a high degree of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before trading Forex, consider your investment objectives, experience, and risk appetite. You could sustain a loss of some or all of your investment capital. And here is one example of that right here. I'm testing a new expert advisor right here. And as you can see, this expert advisor is going to blow my account. It already has it down to $76 off of a theoretical start at 550. If I started with 10,000, I'd have nothing left. So don't, this is again the testing right now, so we're not going to run with that one. The good news is I found out what doesn't work, so maybe if we reverse this that strategy, we could get it to making money. Oh well, it's a dual Bollinger Band EA that I'm building. That I got hooked on that strategy a long time ago, and I'm not sure if it works or not, quite frankly. But here's some that do work. Here's the Bollinger Band, my Bollinger Band and RSI Mean Reversion Pro MT4. And I also have the MT5 version of that too. If you trade MT5, I trade both because, well, where do they go? There we go. Here they are, and we've got 5 downloads and 2 downloads. I've not made videos for either one of these yet, so we'll be doing that soon. Maybe Tuesday, Friday. I don't know. I don't know when I'm going to be doing that. But at any rate, that's where we've got going on. Here is my website that I'm building is tradingforexforprofit.com. I'm still going through QA on it. That's going to take some time, and then I'll be back on adding more features and getting it ready for market. It is ready right now, though. I don't think we have anybody involved on it, but we will certainly take a look at that a little later. And here is the Forex weekly look at. Oh, let's see how my Canadian trade went. It went south a little bit. It's about 24 pips off the stop loss right now. This is theoretical money, by the way. I'm not sitting on 180 grand, 118 grand right now. If I were sitting on 118 grand, I would not have a day job, and this. Who knows? But at any rate, I still have a day job, and I highly recommend having a day job if you're getting started back in trading. I've been starting back in trading for about a year now, and it's a little bit more than a year. And I'm trying to figure out how to improve my trading so I can get better at it, so I can have a foreseeable income, or have a better income than I have now. But at any rate, here's what we have right now. Let's go ahead and refresh this real quick and see if we can get back into that. Nope. Because I want to see a new headline. Yeah, there we go. That's the headline I want. And that's not the week I want. There we go. So for today, U.S.-Iran peace hopes fade as Trump scraps talks. Well, the Iranian foreign minister didn't show up. So I'm not sure Trump scrapped those talks. I think he scrapped them to save money on sending everybody over to Islamabad when the other guy they were supposed to be negotiating with had already left. So, in the meantime, Iran seizes 2 container ships near the Strait of Hormuz and escalating maritime tensions. We have 3 carrier groups in the area, and as a former sailor, that's not going to work out well. At any rate, let's go forward. Here we have the JPY, the Japanese yen news coming up. We have the policy rate decision tonight. So that's why there's a lot of talk in the news about the cap on the U.S. The dollar versus the yen being about 160. And I did not say that. That came from Forex Street. So that's something to keep in mind as we go forward on that. That'll be, we'll watch that tonight. We're not about to trade that. Then we have the Bank of Japan press conference on Tuesday morning. So it's probably going to be around 11 o'clock our time, and then Tuesday morning our time. Something like that. We also have the Australian inflation information coming in, as well as Bank of Canada monetary report and their rate statement coming in. And then, holy smokes, look at this. FOMC. We're going to adjust our rates that day too. We're not going to adjust our rates. Let's see what the Fed Watch, CME, Fed Watch. Fed Watch says we have probably 99.5% if my predictions correct. They're not my predictions, just what I saw last time I was on this site. If I had any sort of magical powers. Oh, 99%. So we came down 0.05%. So now there's a 1% chance of a rate hike. I have no idea why we would hike rates in this economic environment. This is a rate cut environment, and we should not be talking rate hikes at all. But at any rate, let's go ahead and jump over here back. So we have that, and don't we have? Yes, look at this. Oh, that's Thursday. We have ADP. No, we don't. Oh, we've got advanced GDP. Wow, it's been an action-packed week this week. Bank of England does their monetary rate decision this week on the same day as on Thursday. Thursday we have GDP, advanced GDP for the U.S. and for Canada, as well as Core PCE. Holy smokes! Look at all this stuff in the news. And then next week and then Friday we got nothing going on. So apparently non-farm payrolls are going to come out next week. We've got a lot of information coming out this week that could be some fun trading. At least hopefully we'll have some fun trading. If not, we'll have some bad trading, and then we lose money, and then that's not going to work either. So here we go with let's start with the U.S. 10-year. This is the where we've quite kind of figure out what is going on with the dollar, the USD, with the starting point of where the dollar is. It's down about 4.44%. The weekly, I don't really see a weekly trend that we can probably draw lines on. So we're going to kind of leave that one alone. It looks like it's kind of forming a equilateral triangle, but I'm not going to try to figure out the bond market. It's good to keep an eye on the bond market, but I'm not a bond trader, so I'm not quite sure what that means. Here we have the DXY finding some support right here at about 98.229. So you can see this is where the Iran war started. It started way down here, and it's trying to get back down to that mark. It's finding support though right there at about 98.29.25, closing at 98.5, which is a very big psychological number. It's done that a lot in the last couple of weeks. As a matter of fact, that's probably the mean of where we are right now. It is sitting for the past 20 days, and that is sitting just under the 20-day moving average. So we've got a lot of nothing going on right now. A whole lot of I don't want to call it mean reversion, but we'll call it. You could call it mean reversion. Big gap right there. I just noticed on the weekly, but that's kind of a nothing burger for a close. Euro versus the pound. Pound has taken charge again and is quite handily. Again, this is not a pair that I trade, but it is important to see where there's some support, and there is some support right there at 86.36. And at that point, you may want to see what's going on in that little range right there. it's approaching that range. You can look for, so you can look for a possible bounce right here. Again, I do not have a crystal ball. I'm just using what I know about technical analysis. It is trending upward though on the longer slope, so we could see the euro starting to take charge again. Euro versus the dollar. This is pretty much the inverse of the DXY. So if you're trading the euro versus the yen, is also the most liquid of all the currency pairs. It's the most popular currency pair because it's so many countries in Europe crammed into the euro, and that's why it's 57%. As I learned from James Stanley, who from Forex.com, I highly recommend them. Highly recommend watching his videos. I watch them. You should too. But it's got the not the Swiss franc. It's got the French franc, the German mark, and a whole bunch of others crammed into one currency called the euro. They did that back in 1999. And that's why the euro versus the dollar is 57%, because it used to be all those little bitty currencies, and they crammed them into one big currency, and that's why it's 57% of the DXY. Right now, it's sitting at about 117.20. Not very impressive. It's just kind of bouncing between 417 and or on the closes between 117 and 117.20. That's not true. 117.20 and 117.69. So it's a 40 pip range. Again, on the smaller time frames, you might be able to make some money on that, but it's too choppy for me to trade. However, I would look at the wider range, 116.6 to 1836. That's a big, much better range. Even 116.70 to call it 118. Would be a good place to start considering trading too. But again, you can see how flat the markets have been the past couple of weeks compared to these. So with that volatility, it's harder to get a mark on the trades. I would highly consider a mean reversion strategy on a lower time frame on that one, just temporarily till the markets shift, and they're not going to tell you where they're going to shift. Let's see, pound versus the dollar, up again on dollar DXY weakness, and it seems to be topping out around 135.30. We'll take that one off. That one doesn't mean anything. Doesn't mean anything to me anymore. Now it's just in a way. But I do like putting these high lows on here. You can see the weekly high lows. Take that one off too. I don't want that either. Let's save my layout. Okay, so again, it's amazing how long this little structure here is still in place. This resistance support structure, depending on what side I'm on. Right now, it's serving as support. We'll see how long that lasts. The U.S. dollar versus the Swiss franc. Again, heading down on dollar weakness. Dollar's in the denominator there, so it's going to be a little bit weaker. Here's the big one that we're talking about right here, the dollar versus the yen. And we're looking for a rate decision. They're expected to hold at around 75%, at 0.75%. I wouldn't be surprised to see a surprise rate hike out of this. Japan is still trading at a 236 debt to GDP ratio, and they've got to change that, or else they're going to be, well, I mean, everyone mathematically they should already be in a big mess. But they're not there yet, so I don't know what's propping up their economy. At any rate, if I knew what was propping up their economy, it would be a different ball game. Pound versus the yen, well above the $200-day moving average, or pardon me, 200-week moving average. However, this is still not really a breakout at 215.69. Would watch for a breakout, but again, if they raise rates, then you're going to see all these come down very quickly. Some people would call that intervention, but the big players are always manipulating markets. They're always intervening. So it's if you cry market manipulation, you're absolutely correct. Okay, moving right along. Euro versus the yen is right there. Let's see, and that's again that same situation as the pound versus the yen. I would not touch it. It's got too much. Not chasing the tops is just not a good idea, especially not with the rate decision coming up on Monday night. Look at that, Canadian Canadian dollar is right back into this little structure. Looks like we've got firm support right here at. I'm gonna put that line in there. Call that the June 2025 weekly close, maybe, because that looks like that's something that needs to be there. So Ray, go right there. That might help me figure out this market a little bit better. And that is the June 2025 weekly low close. Text. WLC. Okay, so we have the 2026 open, the May 2025 high close. Put this one in here for the November 2025 weekly high close. Let's do that one too, because I'm interested in trying to figure out how to trade the loonie, because it does make sense to me. It's just kind of all over the place, but it's so you back to a whoops. Let me refresh real quick because I screwed up my layout when I do that. Reload. So I want those indicators in there too. When I double click on it, then it takes those indicators off. And I'm gonna have to put that other one, last one, back up. Nope, not the 10-year. Where'd the Canadian go? There you are. There we go. Oh, that one's saved. How about that? That is the November 2025 weekly high close. Weekly high close. And so now we have our range set up. That's the reason why I'm doing that, is to set up where my range is. And you see it bounced off the May. My nose itches. That's kind of where I'm trying to define a range in this, so I can see if I can trade this better. Now that should, in theory, bounce off this and start taking off again. So we're looking for dollar strength tonight, especially something I have noticed is that when peace talks break down, the DXY strengthens, the US dollar strengthens, and everything else drops, like gold, silver, which is very counterintuitive to me, because you would think that everyone would be flocking towards gold as a safe haven, but gold has not, at $5,000 an ounce, I don't know where it's going to be as far as a safe haven. And it's not 5,000, it's 4,700. We'll get to that in just a second. Canadian versus the yen, no longer correlating with the oil trade, and also looking at a possible Japanese bank intervention. So rate hike, aka bank intervention. I would not play with that at all. That's called chasing highs, and chasing highs is where you can get burned very quickly. NYMEX crude oil. This one is kind of a mess, because it started way down here. I was enjoying it at 56, and now it's taken up. This is the one that will tell you whether or not you're going to pay more or less for a how much you're paying for gas at the pump. Let's see. So it's $94 a barrel. This is, again, not the highest it's ever been. You can see in 2008, I don't remember what month that was. That's the annual high of $145 a barrel. And then in 2022, we had an annual high of 2021 a barrel. So this is going to be another one. If this starts dropping again dramatically, then 113 will be the 2026 weekly high close. We're not there yet, but we will see what happens. Let's see. And the Straits of Hormuz have everything to do with it. Dollar versus the Aussie. Look at the Aussie go on dollar weakness. Kind of pulled back a little bit on this past week, but it's I might consider that as a breakout. It's a possible breakout. It's had a nice run from here to here, and it's continuing to break out through the January 2023 weekly high close. So we'll see if it can continue back into its days of former trading fun. The gold, big sell-off on gold this week, down to 47.09. Platinum is down to 20.30 an ounce. Palladium down 15 an ounce. Look for some sort of correlation between the metals. That's why I look at all four of these, because my favorite is silver. It's at 75.68 is where it closed on the week. Again, down, but just about mimicking the week before. Week before it was 79.98 was the open, 83 was the high, 83.05. Where's the close? 80.77. This one was opened up at 80.77 and then closed at 79. So down, no, 75.68. So down $5. We should get these updated to the what if we can? No, can't change the time frame on the watch list. That'd be great if we could. I would like to change that. Oh, look, I have a message. So with that, let's see. Let's look at software stocks and see how they did. This is just fun for me because this is what happens when you completely lose an idea of who your customer is. You're down about 30% on the IGV, which is the software sector's index, if you will. Well, I got trains and people doing more fixing the yard at the same time. Let's see. Here we have the 223. We have HubSpot. This is one of my favorites. Stock used to be up at 813. I used to sell for them. They're down to 223. Salesforce 362 down to 177. I mean, if you want to crunch these numbers, these are big losses. And market cap 785 down to 396, almost 50%. GoDaddy is one of the biggest train wrecks of them all. 212 all the way down to 87, 85. Adobe, and I just figured out a way to replace using Photoshop, which I'm probably not going to do. Probably going to pull everything, all the different aspects of it into Photoshop and then work with it that way. And that's where I got my start in tech, was as a graphic designer. But they had a good week this week, but overall, on the weekly level, there's still no place to buy on this. They're still sliding badly. NVIDIA, the one that made everybody rich when the Congress changed their rules way back here. No, I guess it would be about right here. Maybe about right here is when Congress changed the rules on this, and the stock price doubled. That's where Rokana got his money, is right here, by the way. And Upwork, look at that. One time it was trading at 22, higher than that. High on Upwork was way up here at 59 during, it got to be the days of COVID or right after. October 2021, that's when I was making money on Upwork. And now it's down to 10. I mean, that's and they're another company that went hook, line, and sinker into AI and completely forgot who paid their bills, because AI is not going to pay anybody's bills physically. They do not write checks. They can transfer money from one account from your account if you hook your accounts up to AI, and I highly do not recommend that. But at any rate, let's see where this one just finished. I think, was it still running? Oh, it's still running. Yeah, this is not the EA I'm going to work with. I'm trying to figure out how to get this to stop so I can, well, I know how to stop it, but it's figure out how to analyze it and get this doing the exact opposite of what it's doing right now. So let's see what happens with that. In the meantime, that is about all I've got for today. Let's go ahead and go back to a different screen. And that's about all I've got for this weekly look ahead. Again, the biggest thing to keep in mind is that we don't know what's going to happen with the Straits of Hormuz, with the United States Navy, with the whoever's running Iran right now. I'm not even sure if they know who's running Iran right now. But that is what we're kind of waiting on to see what happens. Also, lots of different rate decisions this week. We've got Japan, we've got Britain, we've got the Core PCE numbers coming out, the Fed's favorite version of inflation, as well as advanced GDP. That's going to be very, very interesting to see if we're going to be up or down. We're probably going to be around. Let's go back to this real quick. I'm very curious to see what the advanced GDP expectation is. Advanced GDP, according to Forex Factory, is, drum roll please, 2.2%. So we're looking for 2.2%. Let's get another idea of this. Let's go to the, where is it? No, let's go ahead and not use that one. Let's use this one. The Atlanta Fed puts out GDP now, I think. Something like that. Yeah, Federal Reserve Bank of Atlanta. I used to live in Atlanta. They're estimating 1.2%. So we've got an expectation of 2.4%. The Atlanta Fed is saying 1.2%, and they can be wrong. They have been wrong in the past. So with that, let's go ahead and let's wrap that up now. That's about all I've got for today's weekly look ahead. We do have a lot of fun coming up this week, and hopefully you can make some money doing it. Hopefully this helps you make money, helps you make some better trading decisions. And with that, I'm going to let you go. So you guys have a great one. Stay tuned this week. If you like this video, then hit the thumbs up button. If you want to see more of these videos, then by all means, subscribe to the channel. And lastly, whatever you do, oh yeah, if you want to talk to me directly, then hit me up in the comments section, and I'll chat with you as soon as I see your comments. So you guys have a great one. Talk to you later. Bye.